Is the hammer about to fall harder on Home Depot? Welcome to Stocks in Motion, where we break down the market's movers with surgical precision. Today, we are diving deep into Home Depot, a Dow Jones giant that's officially in a bear market, down over 20% from its top. We'll start from scratch with a candlestick and Elliott Wave analysis, uncovering what the technicals are really telling us. Is this just the beginning of a much bigger decline? Smash that like button, subscribe, and hit the bell so you never miss our high impact market insights. Let's get into the charts. This is the candles. This is an hourly frame, the biggest that we can get from TradingView. What we are seeing here that in 2021 in January, Home Depot formed a dark cloud cover. Probably it wasn't unnoticed because after that we have 2 years of generally bullish market. However, the things started to get sour at the end of 2024 when instead of canceling this red candle, Home Depot lost a lot in November, December, and instead formed this green candle, which technically is just a failure of a bullish run. Now we are seeing the consequences. The stock is falling, and there is a big chance that it will continue to do so. This is the story from the yearly perspective. And I'd like to emphasize that though Home Depot right now is officially in a bear market because it is already down 20% of its most recent top in November. Now let's have a look at the different frame. So what we are seeing here is even stronger formation on the 6 months frame. We have a very strong bearish engulfing and 1, 2, 3, 4, 5 failures. 5 candles, 5 6-month candles that Home Depot tried to overcome this formation. Now it is officially considered as a falling 3 methods setup. So these are the setup, and if we see a strong 6 months candle, well, we would need to wait another 3 months for that, but nevertheless, this is something to keep in mind. So that's the 6 months perspective. Now let's move to the closer to the quarterly, which is closing in just 7 days. So this is the perspective, and this is what is happening right now. What you're seeing, this is the Q4, very dangerous candle, technically a harami, and at the same time a spinning top. Now we have a chance to see Home Depot closing below the Q3 of 2024 low, and this would be a very dangerous sign because if it closes below this line, and let me put this so it is 331.64. So if it closes below this line, it will be a strong tower top and a very good chance to move lower. And speaking about the monthly frame is technically bearish. And in order to help and reverse this candle, Home Depot needs to rally about 8% in the remaining 6 trading days. Well, it's possible. It's possible. I cannot argue with that. However, the probability is somewhat on the lower side. And now let's have a look. Now let's add some technicals here and see what is happening on the smaller frames. So this is the monthly frame, and we are seeing lots of support lines being broken right now. The 8 months EMA, 20 months EMA have been bridged down, and right now HD is approaching the 15 months moving average, which would be a significant support line. And if we look at the history, we are seeing that this 50 months moving average has been a very strong support in the last 15 years. So before that, we had Home Depot broke this line only in May 2002 and back in August 2007. So other than that, these were just sharp falls which were immediately recovered. So this is the perspective right now. If we are approaching this line, and this is going to be a big one. And another thing that I would like to say is this. Home Depot is about to form a MACD cross on the monthly frame. And this would be a bearish one, a very significant one. You can see that just from its magnitude, it's going to be the second highest on record. And let's say that if the highest one incurred losses about 37%, so perhaps we might see something somewhat similar in this case, if it is confirmed. Well, we still have 7 days, six trading days for reversal, and right now this cross is marginally done. Well, that's the perspective for the monthly. Now let's have a look at the smaller frames. 15-day frame, it had a tower top formation here, and right now the candle, which will be closing at the end of the month, is on track for moving lower. 10-day frame, the same story, and now if you look at the weekly frame, it's an even gloomier story right now. So what we are seeing, the weekly lost 50 weeks moving average, and now it lost 100 weeks moving average with this little doji which it formed last week on Friday. That's a very concerning path, and we are not seeing any reversal signal this time. This is another concern. If we look at the smaller frames, for example, the 3-day frame, we have two consolidating doji, which are nowhere near bullish, and the chances for Home Depot, maybe it will form another one, maybe two, but the chances are right now pointing downward. And the daily frame is also a bearish at this moment. We are not seeing the perspectives for a rally. And I'd like to say and like to mention this one, the 50 over 200 days moving average bearish cross. It looks like it's going to be imminent in a couple of days, maybe next or the first week of April. That's the perspective. And now let's summarize this one. We have a daily, 3-day, weekly, and the monthly frame with a looming MACD bearish cross. So everywhere we can look everything is bearish. So Home Depot has, from the candles perspective and technical perspective, though Home Depot has a very good chance to move lower. Now let's have a look at Elliott Waves. Let's assume this was the last biggest bottom, and we are not looking at the very long-term chart. So this was in June 2022 when Home Depot formed the bottom, and now it is a wave. So what happened last week? Home Depot made this overlap, and technically it negated all chances for this wave to continue higher as an impulsive wave. Now the only chance it can go higher as an ending diagonal, even a bigger ending diagonal, but I have some concerns about this path, and particularly from the candles and technicals perspective. We just discussed them. So what we are seeing here is that this is not an impulsive wave. It could be a motive wave as an ending diagonal, and this could be either wave 1 as a leading diagonal of a bigger impulse that will start later, or this is the final wave of a bigger structure. And let's visualize it. So this is our perspective structure. This would be wave. This would be an ending diagonal. Wave 1, let's mark it. Wave 2. This would be wave 3, wave 4, and finally wave 5. What you can see here is technically this diagonal is very nicely shaped. I'm not talking right now about Fibonacci levels and other technical signals. However, from Elliott wave theory perspective, we know that wave 5 very often surpasses the imaginary line drawn between tops of 1 and 3. So this is a very nice closure of a diagonal, and the sharpness of the wave down is indirectly confirms this hypothesis. So what we know about ending diagonals from the Elliott wave theory perspective is that they tend to return to the level of origin. The level of origin for this ending diagonal is 264.51. Let me mark it here. 264.51, and this would be our target for this particular move from Elliott wave perspective. So it might not reach the target, but it usually comes very close to it. But it also can reach the target and move lower. In this case, we would be looking for something even more, even deeper, for a stronger decline. So that's the perspective. And now, and from the level of the current level, we already have 20% off the top, and now we have another potentially another 24-25% of the top. So let's measure the total loss here. It would be about 40%. That's the perspective. I would say this is a lucky path at this point. Now let's have a look at the smaller frame and try to evaluate how this wave would behave. So what we are seeing right immediately right now, so this is potentially an impulse, the impulsive wave off the top, and this is a very strong signal. So every time we see an impulse after some correction, it is usually repeated of a similar size, with an impulse of a similar size or a bigger one. A bigger one is more concerning because now we would be looking for a potential impulse like this, and this would be another something like that, for example, and this would be only wave 1. So let's mark it. So we have wave 1, 2, potentially wave 3, and we will measure it right in a couple of minutes. And this would be wave either 1 or potentially wave A of a bigger correction. And I would like to also have this possible wave here, and I'll explain it just a little later. So now let's remove this one and try to measure the wave here. So this is the first wave, and if we measure it here, I would say that wave 3 would be probably somewhere here, and wave 4, so this was one, this one was a sharp one, so this might be more shallow, and wave 5 we would be looking for, oh no, so this is for this wave. This, let me mark it. So it would be 1, 2, potentially 3, wave 5. This would be wave 3. This would be wave 4, and wave 5 somewhere here approximately. This is the most typical Fibonacci levels I'm using, but every time it could be different. And now if we try to make some channel, so let's say this would be a very preliminary perspective for the channel, and something like this. So we would be looking somewhere here, wave 4, 3, and wave 4 here, aligning with this wave 4 potentially, and wave 5, end of this. So that's the perspective. This would be the perspective for the wave that Home Depot might make. And a few explanations here. So this is impulse, obviously, is the worst case scenario. If we have the impulse of this size, it would definitely be just wave A of a bigger correction. And I'm talking about this one. So this would be wave A, this would be wave B somewhere, and wave C following it. That's a very approximate shape right now, and I would need much more data in order to project it more clearly, and this would happen only in a couple of weeks, if not months. So that's one perspective. If we have an impulse here, if we don't have an impulse, and let's say this wave completes just on ABC, like wave 1, 2, and 3, this would be wave A, potential wave A of a bigger correction, and would be somewhat similar that I just drawn for the red path, but the green one. And to visualize it, it will be something like this, for example. And that's another perspective. Well, this could be the end of this correction. This could be the end. Instead of wave A, we could say that this is just wave C. Let's pick another color. So this is just wave C, and this is it. So after that, Home Depot just resumes the rally towards higher high. So at this point, especially considering the candles and technicals, this is a very unlikely path. Although we still mention it, and we still keep it in mind. So that's the perspective for now for Home Depot. And let me change the color for this wave so we're not confusing it. So this is for the purple path, or for the blue path, wave 3, 4, and 5. That's the perspective, and now let's see how it aligns. So we have our estimate around this area. So approximately, I would say it would be somewhere here. This is my approximate target at this point for a wave of for wave of 5, 1, or A. That's somewhere between 300 and somewhat between 300 and 270. Let's see how it aligns with our long-term chart. So this is 264. So technically 270 that we just said, it's here. Oh, sorry, wrong one. This is 270. So this would be 270 here. And let's see how it aligns. So this is the perspective from the Elliott Waves, from the bigger perspective and closure of the ending diagonal. And we might see this wave here. So this is wave 1, wave 2, potentially wave 3, 4, and wave 5 somewhere here. So let's make it a bit more visible and change the degree. So that's the wave we have been talking about. This is the view from the larger perspective. This is the view from a smaller perspective. There are quite a few other techniques that we are using for evaluation and alignment of multiple targets, but this is just the two of them, and let's see how it works, what kind of candles it forms, and all views will be on the ending footprint for ending print for the monthly and quarterly candles. So to summarize, Home Depot is sending a message, and it's not a pretty one. The technicals suggest the stock could be heading for even deeper losses, with Elliott Waves and candles aligning in a bearish narrative. But here's the real question. If Home Depot crumbles, what does it signal for the construction industry? How might this impact the Dow Jones index, where Home Depot plays a major role? Could this be an early tremor before a broader economic shakeup? Let us know what you think in the comments. Are you seeing the same red flags? For those who are interested in the charts that I discussed today in high quality, I will post them later today at investingangles.com in a special report, and all you need is just a free reader subscription in order to get them and watch them. So, like, subscribe, and turn on notifications so you stay one step ahead. For deeper insights, visit Investing Angles and explore our premium content, where every candle and every wave has meaning. As always, stay sharp, trade smart, and happy trading.